Carnival, and I'm the Chuck in the Markets Up Chuck. And in the spirit of investor education that this week's blog is dedicated to, I thought here in the middle of the week we would take a look at the difference between investing and speculating, because the fundamental differences are obviously profound, but yet one is not necessarily better or worse than the other. And to do this, to illustrate my points today, I'm going to take a look at a company called Genomic Health. And Genomic Health is basically a biotech company that focuses on oncology, and as you can see here on their website, they've got some very interesting products. But it's a company that one could get very excited about because of a lot of the promise that this company has. But we're going to take a look at it today from a fundamental point of view, and try to point out that with a young company like this, you really are looking more you're behaving more as a speculator than an investor. So let's take a look at Genomic Health from a standpoint of fundamentals based on earnings. Utilizing our fundamental research analyzer to our frat, let's take a look at this company from the standpoint of its earnings and cash flows. I want you to notice here, this company was basically went public in 2005, and I want you to know there were no earnings at all from 2005, 6, or 7. They actually had losses in 08 and 09, and then they look like they're going to eke out a little earnings in calendar year 2010. That's the current estimate of about 15 cents a share in earnings. So from an earnings point of view, obviously this young company hasn't really had much of a track record. Now, when you bring price into the equation, we're going to look at monthly closing prices. You can see that, after they originally came out and went public, as often will happen, there was some interest in the stock. In fact, in 2006, it had a really good year, topping out at $24.30. Remember, these are monthly closing stock prices. They don't always have the actual highs in here. In 2007, it went up to about 27, but then, it kind of flatlined from there. I want you to notice during this period here that the company's stock price had some, short-term volatility, but really went nowhere. From a track record point of view, I want you to notice that a $100,000 investment when the company went public on September 30th, 2005, would have grown to $168,000, and that's a 13.6% rate of return, and that's actually significantly better than the stock market did over the same time frame, when the stock market only averaged $86,000. So, obviously the company, did pretty well for its investors if you'd have, been an investor in their initial public offering and held the company, till today. But let's look at the company just from the last 3 years and point out there were no earnings during this period, and there still aren't any earnings during this period. And I want you to notice that the stock price, this is the point I mentioned earlier, that the stock price pretty much stayed range bound. It had a low of 14, a high of 27, or 26, had a low of 16, a high of 27, a low of 15.80, a high of 27. So the price stayed pretty flat, really, although there were periods, from, quarters or months where the stock price showed some volatility. But a $100,000 investment over this 4-year period, by the way, interestingly enough, still outperformed the market, but yet, ended up losing about, 5.7% a year compounded loss, turning 100,000 to 85,000. And this isn't really in the last 3 years, because remember, I've got 1 year of estimate in this chart. It says 4-year chart, but it's only a 3-year chart. So the point is, there's really this whole time frame, you've always been speculating on this company because there really haven't been any fundamentals underneath the stock. I would like to direct the listeners, a place that you can find some interesting research on companies that is free and available to the public is one of the wikis. It's Stock Research Wiki. It's sponsored by Zacks. And if you look at Genomic Health in this format, you can go down here and look at some forecasts of revenues and earnings and so on. And one of the points I want to make is that the consensus of analysts right now are forecasting this company by the end of 2012, the beginning of 2013, to earn about $1.20. They expect very little earnings, 20 cents a share in 2010, maybe 70 cents a share in 2011. So let's look at those numbers from the fundamental research analyzer tool perspective. So on the basis of those wiki numbers that I just showed you a moment ago, this is what the picture would look like looking into the future. And by the way, there's also a consensus for a 15% growth rate, which I'm not really sure is real relevant, but it does allow us to put a reasonable multiple in here. But at 15 times 70 cents in earnings, this is what you'd look at a value of around $11. The stock currently trades at 19. That's by the end of 2011. It'd be an $18 stock by 2012, which is about where it's currently trading. It'd be a $21 stock by 2013, a $4 stock by 12/31/14, and assuming we got this growth of $27 or $8 stock by 27/45. Now this picture can change if the growth rate was actually significantly stronger, and really, frankly, this growth rate actually is a lot stronger. However, because of the first couple of years of not very much growth, we're not really throwing much of a, the average gets kind of distorted. If I went into Zacks, you would see that these numbers are, this 15% growth rate is correct. But the point is, all this is a big unknown out here, and as a quote-unquote speculator in genomic health, you have to realize that what you're looking for is the future. Now, these numbers could be significantly better. For example, if the growth rate was significantly higher, which is possible for a young company like this, or a small company with only 500 million, there is a possibility you could get some really staggering growth on this company, and at that point, then the numbers would change dramatically. But the point is, there's very little visibility here. You don't have any earnings history, or certainly scant earnings history, actually no earnings history, and so this really becomes a speculation rather than investing. It might be worth doing if you really dig in and learn about the company and get into their pipeline, and so you can do that going back to their website by looking into their pipeline and looking at these different cancers and deciding for yourself whether or not there's a lot of potential here. But at the end of the day, when you're looking at a company like this that's this young and is just beginning to build their business, even though they might have great science and great products, you still are a speculator here rather than an investor, because the fundamentals really aren't underneath this company yet. I hope this gave you some insights into the difference between investing and speculation. This is Chuck Harbaugh saying thanks for listening, and talk to you again tomorrow.